So it is a pleasure to be here this morning. As Eric had said, my name is Tim Craighead. I'm Senior European Equities Strategist at Bloomberg Intelligence and one of our research directors. And just for reference, BI, as we refer to it, is a team of 450-odd investment professionals around the globe providing investment research. If you have Bloomberg, you have us. I'd be happy to talk more about it. Let me get to the point here. It's an honor to be in front of the World Bank president to set a little bit of a stage in the discussion that he and Eric will be having as we look ahead. To do so, what I would like to do is focus in on 5 points that we think are quite critical for the 2024 outlook. To start, I'll roll the clock back just briefly at 2023 to provide a bit of a setup. What you see here is simply a shocking year in 2023. We had unprecedented central bank policy hikes over the past 18 months. We had a banking crisis. We had distress in the Chinese property market. And we had a second war in the European Middle East region. What more could you want from the standpoint of providing a challenging backdrop? But what was the result? Resilient economic activity and a break in inflation, just as was hoped and designed. We didn't fall into recession. The prospects going into this year and next are for a continued growth, moderate as it is this year, but accelerating for next. Inflation is clearly broken and heading down towards more normal levels. With that as a setup, let me get into these 5 points. First key driver, central bank policy. Expectations are clearly now for a pivot. This screen, those of you all who know Bloomberg will be familiar with it, is showing current market expectations for the U.S. Federal Reserve Fed funds rate. We could shift to other countries and you'd see exactly the same thing in terms of a quick pivot that starts as early as March, marching down in terms of policy rates. This is a dramatic shift even from where we were a couple of months ago, which happens to be that yellow line. With this, markets have been pretty much priced for perfection across asset classes. Maybe a source of volatility as sentiment swings here and there over the next few months, but we do have a constructive view over the course of the next year to 18 months. Second key point, elections. We've never seen a year like this year where we've got this many elections, general elections, across the globe, developed markets, emerging markets. Certainly there'll be repercussions when it comes to policy, geopolitical relationships, trade, climate change, and energy transition. Stay tuned. China, a third key driver. What you see here are the Purchasing Manager Survey that shows the big bulge from reopening at the beginning of last year, but is stalled. A lot of that relates to the property distress, which continues. Important measures have been put in place to try to draw a line under this stress. We hope it works, but there are repercussions not only for China, but for emerging markets as well as Europe and the US that we're quite focused on. Energy transition, sustainability, ESG, all important, all quite relevant here in Davos. I'd bring your attention here to a survey that we did back in November in front of the New Economy Forum and COP. And it went half to corporate C-suites, half to senior investors at large institutions. And the bottom line here is, yes, there's cover with the current political backdrop to sort of step back. But 85% of both sides of this divide were committed to these efforts. Corporates view this as a competitive advantage. Investors see progress in this area as driving returns. So there is commitment. It is moving forward. We should be constructive. Last but not least, technology is a fifth driver. I know this chart's a little bit busy, but I'll reference another survey that we just released, which was a survey of senior chief technology officers across corporates. And the punchline here on the left side is the vast majority of corporations are looking to accelerate tech spending from a bit of a lull in 2023. A lot of that relates to AI, which Lord knows is all over Davos this year. Importantly, Part is also related to the lack of data that still isn't fit for purpose for AI, which is part on the right side. Summary is tech spending will be accelerating, we think, over the course of this year, and we'll see progression from experimentation on AI to implementation. I'll bring my comments to a close here. This is the tip of a bit of an iceberg of a presentation that goes into a lot more detail. I'd be happy to share this with anybody, and I'd be thrilled to talk more about Bloomberg Intelligence if anybody would like. Eric, back to you.